Look out down below because we are now retesting our range lows on XRP down to $2.38 as of this morning, currently sitting at $2.43. And if Bitcoin and the general crypto market continue to break down from our current level, things could get pretty nasty pretty quick, which would mark the actual all-time high of this bull market cycle at $126,000 on Bitcoin and $3.66 on XRP, which would arguably be one of the weakest bull markets in history, even with all of the institutionalization. We recently heard Larry Fink be extremely pro and positive crypto at a financial conference. We're seeing spot ETFs for cryptos pop up all over the board, including the latest scoop on the Canary Fund's S1 filing for the XRP spot ETF, which we are going to cover. But many are speculating that the whole market is down, that we saw an exhaustion pump, and this is probably because the China truce between the US today did not make that much progress. What's even more worrisome is that we're getting tons of mixed signals. Maybe Michael Hartnett from BOFA was correct. You typically want to sell the first rate cut. He just got the wrong first rate cut in his sights, as the Fed interest rate decision on Wednesday was actually positive for markets, where they lowered interest rates by another 25 basis points, which should increase economic activity and borrowing. The problem is they tend to only do this when the market's actually struggling and they're starting to get a lot of negative economic readings. So the reality is we're seeing one of the biggest deviations in market history, something that they call breadth, as today's S&P all-time high on October 28th makes the history books, and it happens during one of the most negative market breadths at an all-time high on record. This essentially means the red line is the S&P 500 making new all-time highs, which is a good indicator of the overall strength of the US economy and stock market. The blue line, however, the one that we just saw right here, continuing to trend downward, is the S&P 500 advanced decline line, which calculates the net value of the number of rising stocks minus the number of falling stocks. In other words, we have more falling stocks while we have major companies like Google, Meta or Facebook, Microsoft, Apple, and Amazon all reporting increased revenue and earnings yesterday and today. In other words, there is a flight of capital into the largest and safest assets, and it doesn't seem to be going into Bitcoin right now, as Bitcoin is down, while assets like XRP tend to follow Bitcoin, also down on the day. So at this point, is an XRP spot ETF enough to actually make the price rally? And are we seeing enough positive developments on the crypto end of the sector in order for this market to climb to new highs by the end of the year? This is one of the most interesting end of the years that I've ever seen in a 4-year cycle. So much so that even Brian Armstrong went ahead and reported that they had a very strong third quarter at Coinbase, Coinbase being one of the largest exchanges on the planet and in the US, with over 50 some million active accounts, and at virtually every single metric they have grown. So as crypto is growing, the prices are declining. This doesn't make sense. And my aim in this video is to help make sense of it all. So you're going to want to stick around until the end. And my goal by the end of this video is to hopefully help you manage risk and enter this last few months of the crypto market with more confidence to make decisions that are either going to make you money or save your money if this thing truly is over. And as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PauliEDEFI. So the first thing I want you to notice is the fact that on the day we are currently down on virtually all markets, even if they posted really good earnings and growth. Companies like Google, Microsoft is down, Apple is down on the day. Even though they gapped up in the start of the trading period and then sold off throughout the day. Amazon is also down, even though they're going to be saving a lot of money by laying off close to 30,000 employees and 14,000 white-collar jobs, which Amazon expects to cost $1.8 billion. And the reality is these major tech companies make up the majority of the market. While they are up and continuing to hold decent, strong ranges, virtually most of the stocks in the S&P 500 500 are struggling to maintain a strong support or breaking down heavy. The market breadth is widening, and the QQQ, the Nasdaq, has consistently been trending up since it broke off those bottoms back in May, holding a long strong range and then seeing what we're potentially going to call an exhaustion gap, where we finally get some last moves to the upside before coming and retracing back into the range. In other words, watch this line closely. If we break back down into the daily range or below $625 on the QQQ, it's likely the rest of the crypto market is going to follow. And so as the QQQ starts to trend back into the range and hopefully doesn't break down too much further, we'll notice that from the time of the Bitcoin all-time high, I'm going to pull up this orange chart right here. You can see that Bitcoin all-time high happened on October 8th, just days before the largest liquidation event in history. It is currently down 13 to 14%, while in that same period of time, the Nasdaq is up 2.6%. In other words, there is a larger and larger deviation. The crypto market tends to lead the market. Right now, it might be leading to the downside. In other words, the top might actually be in for crypto, and that's not something that I wanted to say, nor do I 100% think the top is in, but we're getting very close if crypto can't turn this ship around very quickly. When I pull up XRP, relatively speaking, you can see that they're highly correlated, right? Bitcoin goes down in the orange line, the blue line is XRP. XRP also goes down, except XRP tends to be more volatile. It pumps stronger when it pumps, and it dumps harder when it dumps. XRP in that same period of time is down 18.3% versus Bitcoin's 14%. Both markets are down and may be giving us warning signals of what comes next. Now, many people expected the Trump meeting with Xi Jinping on tariffs and the trade war to go well. Matter of fact, President Trump even said it wasn't just nice, it was a 12 on a scale of 1 to 10, but he tends to embellish things and speak very highly of situations that might not be that great. In terms of what actually occurred at this meeting, or at least what we know, is that this truce is positive for now, but they expect tensions to escalate in the future, as both of them exchanged nice words, but didn't actually address the underlying conflicts, as commerce is going to be rocky for years to come. And obviously markets don't like that. It seems that people were playing the Trump tariff trade, but now as we're seeing the general market weaken, even with major stocks up, the deviation and gap is going to become greater. And we've seen so much money flow into gold, which tends to be an indicator of uncertainty, especially in a shaky fiat currency. The one thing we can virtually guarantee into the future is volatility. And by the way, if you're a day trader, vol trades are great. However, for investors, it's a very sketchy scenario to sit through positions when the market is trending down or struggling to maintain a support, which is where crypto is right now. It's kind of like on life support near the top. It doesn't mean life support at an all-time low. I'd much rather have it there because then it's a good dip buying opportunity. But we're buying right now near all-time highs, even though it's a dip in a market environment that's giving us a lot of mixed signals. For example, 2025, we've seen some of the most positive news ever recorded for XRP and the community. And now Canary Funds has filed an updated S1 for its XRP spot ETF, removing the delaying amendment that stops a registration from going auto effective and gives the SEC control over timing. In other words, a potential launch date for the ETF would be November 13th, which would be huge for an institutional adoption of XRP, creating a lot of buying demand among more of those safe investors. Then you're seeing the Nasdaq up. You're seeing Google up year over year 35%, Meta up 19%, Microsoft 23%, Apple 13%, and Amazon a whopping 36%. So positive on the crypto side, positive on the stock market side, positive even with Coinbase, is almost every single metric of their business is up, whether it's trade volume, net revenue, crypto payments, their derivatives business, Coinbase One card spend, their custodial side of their business. Literally, Coinbase is crushing it. And even in a slow third quarter, their adjusted EBITDA is up 56%. So yes, the crypto market is actually growing, but it's growing among institutions. And we have to remember, institutions can make money on the long side and the short side, even while we see long-term accumulation of these cryptos. In other words, sometimes the market doesn't always need to trade up even while there's accumulation, because there's a lot more trade activity among bigger players who who can move markets. Heck, the crypto market's doing so well that even the CEO of JP Morgan Chase, Jamie Dimon, admits he was wrong about Bitcoin and crypto. He always used to trash it, and now he's on board with it. Let's listen to what he says.
Skeptical of crypto at one point. He was still skeptical.
I've gotten away with no damage so far. Crypto is real. If you mean blockchain, stable coins, you have a JP Morgan deposit coin, you can move stuff, smart contracts are real, all that stuff is real. It will be used by all of us to facilitate better transactions and customer service.
And then here we have Larry Fink, asset manager for BlackRock, the world's largest asset manager, speaking on crypto and asset tokenization using blockchain technology.
I would say the biggest question from central banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
In other words, crypto and blockchain technology are already confirmed to revolutionize the plumbing of finance. Yet even on strong earnings, a company like Coinbase, one of the largest crypto companies, is still down 26% off its local high and in a current shorter term downtrend where we have a support at about $300, but we're seeing a series of lower highs. So I think it all comes back down to this market breadth image showing how the stock market is climbing for new highs, but how less and less companies inside of it are actually performing, which is just an indicator that people are truly uncertain. So instead of investing in a bunch of random companies that can potentially outperform all of the largest market cap companies, they would rather just toss all of their current money at the safest and biggest plays, the ones that are proven with a track record of producing real revenue and income. But while we're seeing gold tick up and while we're seeing interest rates tick down, to me, this is a surefire indicator that we're going to see far more volatility here in the near term. So with all of that said, yes, I am a bit nervous about the continuation of this bull market as we're yet again retesting our prior support range of about $108,000 to $107,000, or this big red box that I've drawn. As you can see, not only have we touched it once, almost twice, 3 times, and now a 4th time. And if we break down here, things are going to look pretty nasty considering the fact that we did see a pretty interesting little bull trap here and a lot of volatility on a lot of sell volume, which is indicative of a lot of leverage, but also capitulation. So unless we can get back above 115,000 or be supported here, I personally don't want to add to any risk on any crypto, especially ones that are trending lower than Bitcoin or below their support ranges. Something like XRP, even though a lot of people love this asset, especially on this channel, is currently below that support range where Bitcoin is just hanging on by a thread, which means that this asset or crypto is relatively weaker to Bitcoin and also sold off of its double top right here at about 260, currently sitting at 244. This thing definitely needs to hold at least 230 to 233 in order for it to be healthy and maintain this range between 230 up to 270. Either way, for me to want to actually purchase XRP anymore, because I don't want to add to my risk, I would like to see it actually break above 273. If I'm buying dips down here, it doesn't mean that it can't be right and then trend up to 270. It's just that I'm adding to risk in the case of a crypto market breakdown where I buy a dip here and then it continues to trade against me. So I'd rather buy strength rather than weakness. And so that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also head on over to Altcoin Pro if you're wanting help navigating the end of this bull market cycle, whether we're in the start of a bear or whether this thing starts to continue trending to the upside. You're going to have all of the alpha here. here, not just including our live calls where you probably learn more in a single call than you ever would on a YouTube video because you can ask all of your questions live, but also take advantage of this Altcoin Pro library that we're consistently adding to. Whether you want to master DeFi, take advantage of DeFi yields and farms to put your crypto to work for you so you can actually earn interest to lower the volatility that your portfolio experiences, or learn how to manage your taxes properly when it comes to crypto. Now, I know all of this requires education and time, but I can assure you in 15 minutes or less, once per week, if you took advantage of just 1 to 2 of the opportunities in here, not only could you make your money back inside of the membership, but you would actually experience far more growth in the crypto space. Whether you want to be a crypto millionaire, which we can't guarantee, but what we can guarantee is that you're going to be 100% happy with the results you get here, or the education you get here, or even just the tools you get here, or your money back in 14 days. So go ahead and check out altcoinpro.com. Thanks so much for watching this video, my friend, and I will see you in the next one. Goodbye.